and welcome to today's Pitch Deck Clinic, where today we're meeting Nick and Tanya from SocialSync. So Nick, tell us a bit about SocialSync.
Okay, so SocialSync started because I had this business which worked with a lot of influencers. It was something like 40,000, and we were tasked with doing their social media. And we were using different programs because we thought in this day and age, you should just be able to use a bit of software. It will tell you how to make the perfect Facebook post to get the perfect amount of sales or whatever it is. What we realized is, although there are things out there that allow you to do things like post scheduling, there's nothing out there that tells you what do I write or how do I structure my ad that will give me the perfect results or the best results for my business. So that was sort of the birth child of this company. And as we talk to more SMEs, which typically have a lot of less amount of money to spend, we realize that it's a huge problem for them, especially when they're competing with larger businesses, because they need their £200 advertising budget to stretch. So that's basically it in a nutshell.
Okay. So, I mean, I've done businesses and been involved with many, and, getting social media traction and getting posts out there is always obviously key to the growth of the business. But it's actually I've been amazed. It's really painful. It's way too complicated. So I'm hoping you've got something awesome. Now, for me, every pitch deck tells a story. So if you're in the business of, advice on great social media posts and so on, then I'm looking for your deck to be completely on brand with exactly the right messaging. So let's have a look at that. But before we dive in, tell me the key things that I might be able to help with on this session.
So I'm getting a lot of conflicting advice when creating deck. Some people tell me to put a lot of information in. Some people tell me it's too much. Every time I pitch it, I seem to get a different reception. Sometimes people like it. Sometimes people are confused by it. It's just very confusing. And what we're trying to do, because it's a technology platform, is condense that really complicated technology, strip it of jargon, and make it easy for a layman person to understand like that. And that sometimes is difficult to achieve when you're talking about certain things in tech. So I'm not sure whether I'm on the right path with this or not, I suppose.
All right, so great points. And I must say that is a standard problem that every entrepreneur, myself included, gets, which is you show 5 people your deck and you get 5 different views, and then which should you take into mind, including my own here. So I think the way I like to look at it is, you've got a particular vision. Your slide deck has got one purpose in life only, really, which is to get an investor to give you some money. So you want to hone it for that purpose. And as part of that, you're going to get feedback from lots of people. Some of it will align and some of it will be in completely different directions. And your goal now is not to listen to everybody, but to figure out which ones are useful, which ones enhance it. If you're hearing the same thing from many people, then maybe it's something to incorporate. On the flip side, you might disagree. Everyone's telling you, turn it into a SaaS monthly business, but actually you didn't want a SaaS monthly business, so you resolutely won't go there. So it's all about filtering and taking the information you want and actually not listening to the ones you don't want. But if you are getting feedback, often the feedback is not to be taken at the literal level, but to be taken at the more subconscious. Why are they telling you this? What's the subtext behind it? Maybe they're telling you, come back later, which is often the subtext for we don't really get it or we don't think you can build it. So when you've proved you can, then come back to us. I'm not suggesting that's the case here. Anyway, without further ado, let me add to your number of data points and let's see if we can bring some clarity. So let me share the screen. So the very first thing, of course, is on slide 1, it says March 2020, and this is now some months later. So of course that would be a problem for 2 reasons. 1, your deck may have actually changed since then, but 2, it means that you've been talking to investors for months, which isn't a good sign. So your goal is to create that vortex of desire. So investors go, the fear of missing out. But if it's been a few months, obviously COVID's in between. So these are not normal times, but always updated to, this month's date. So it feels current and hot. Okay, so on the front page, there's a super cool logo. It's nice branding. There's a person on a hammock or something and a mobile phone. Okay, it looks suitably, Instagram-ish. Great. Okay, so now you've switched into a very businessy. This is some. Is this Chicago? Maybe Chicago picture.
Yeah.
So biz trends. It looks a bit sort of, the branding has changed. I was probably expecting social media more happening. But,
Okay.
and then you also tell me 73% of businesses. So this is establishing the size of the market. I'm not sure it was truly needed because we assume most businesses need this, but let's hold and let's see how the story progresses. Also, your data is 2018, which is quite old. So
yeah, I think we will be able to get 2019 data this month. So yeah, I will update that.
Okay, and also if it was 2018, I mean, it's unlikely to be very different between 2018 and now. It's not like it's going to be lower. So you might just lose the 2018 or put it in a very small font or something because otherwise it again looks old. Okay, so the problem. Companies use social media for raising awareness, time-consuming, inefficient, expensive. Okay, so at this point, nice lifestyle picture, person holding phone, pictures on phone, something. Okay, great. I think the problem statement maybe could be put slightly more excitingly, but as I'm reading this, I'm thinking, I agree with all of these things, but it's a busy space. You've got lots of huge companies, creating products in the space. Nice. I'm now looking for the differentiator. So let's see if we address that on the next slide. So if we quickly look at the problem again, time-consuming, inefficient. Okay, so those are the key words in my mind, time-consuming and inefficient. So now we get to the next slide, which is your huge competitors, which indicates you've got formidable competition, but also, it's you get it right and there's a big valuation to be had there.
So I think the idea behind this slide was because often when I went from the problem to the solution, a lot of people they said, well, what's the difference between you and X, Y, and Z, even if I explained it? So it was kind of really to poke holes in the existing solutions. So then when we present our solution, it's like, oh, that is really different. That was the idea anyway. I don't know whether it was executed correctly.
Okay, so I agree, by the way. So in some cases, a concept doesn't have any competitor. I mean, obviously, it's something really novel. In other cases, it's a better way of doing an existing thing. So now comes the question, should you show your solution first and then the competitors? I think you've chosen to go with the competitors first, which leaves me wondering, okay, great, you've got competitors and you've told me some weaknesses. I would, at this point, and we'll see in a few slides, I would probably switch it around. So for me, the formula is first page, ta-da, change the world with X. Next thing is, what are you going to do in a little bit more detail? Then something about it so that I understand what it is. Then show the market opportunity. Then show the competitors, usually in some sort of, 2-quadrant or 4-quadrant matrix, which is you're normally at the top right, but you're going to show that one of them has got lots of features, but it's unintuitive, and the other one might be expense, or this is on a SaaS model.
Right, yeah.
So we can see at a glance. So to me, that is the story that I would be developing. So I think these also a bit, they're not really strong points. I mean, when you've got competitors, you've got, billion-dollar valuations, then the challenge is that they can build anything quite quickly were they to want to do that. So I would be looking for more than a slightly, weak, they're unintuitive. Well, if they couldn't make it intuitive, then what's the difference? Okay, and why couldn't they, and how are you going to? So let's now get to the next slide. So solution. I would have probably put this a little earlier, but so now you've got, okay, so I've got a feed, and the question is, what app am I looking at here? Is this the SocialSync app, or is this someone else's app? I'm guessing this is someone else's app.
Oh, no, it's the SocialSync app.
Oh, this is SocialSync. Okay,
Yeah.
cool. All right, so you
it's our
might
mobile
want that looks very cool. You might want to, by the way, put SocialSync logo or something, even if it's not in the app, because it's on the home page, but over here. So there's no doubt that I'm not looking at, someone else's social media app. This is SocialSync, which looks very nice. Okay. And here the graphics say May 2020. So that's something that you might want to make timeless, like it says, 20 minutes ago.
Right,
below. So, if you can remove anything in the deck that will date it, you're better off doing that way. All right, so the image looks slightly washed out and,
I just noticed that,
but make it look really high res is useful. Okay, so your solution. All right, so the optimization seems to me a key USP. The syndication to multiple platforms, I mean, to the best of my knowledge, lots of products do that. I mean, that's key to most of the Hootsuites and others. Okay, so campaign automation. All right, so I think on the campaign automation, I'm bought into that, but think that others do that as well. So I'd be looking for more information on that. And then, okay, so now you've got me interested with the API access. So I think the API access is an interesting one because for you, it's a strategic advantage. But I doubt that companies going to shut off the API access.
No, same.
so in which case it's kind of noise, and it's probably not worth adding, because by adding something that isn't part of the signal, you invite a discussion around that very point, and now it's taken me off something else, right? So I'd probably lose that, and since the automatic syndication isn't a key USP, maybe we're now taking a fairly busy page and turning it into two key things. One, optimization technology, and two, complete automation. And you might even put that in a user benefit way, which is we'll optimize the wording for you, and we'll save you time, getting it out or automating the ideal time. So let's crack on. So now you've got some people eating dinner, and you've said market research. Okay, so it's kind of fun that you did your market research over dinner. I'm assuming you're saying that. It sort of downplays slightly the market research. It's sort of, I would expect market research to be a little scientific. Is it quant? Is it qual? Did you do 5,000 people? Did you do some things over what looked like a number of bottles of wine? So I think the picture is nice, but it might devalue the research slightly.
Okay. Right, yeah.
700 businesses. So in fact, there you say you're sending it to 700 businesses. It wasn't a dinner thing, so it was cool. Ran focus groups. Okay, so this is really the trust us slide. We're going to look at a moment to see whether this is a good one to have. So I think the trust us is probably useful in two stages. One of them is before the product is live. Why, as an investor, I believe that you know what you're doing, which you're going to establish your credibility because you've built other startups, or you led social at Facebook, or you've done some research. But once the app is live, then I would discard this and I would look at your actual metrics. So, we'll see in a moment whether this one is useful, or it's like, okay, great, we've passed this already.
Oh, okay, I see.
Okay, So now the UK market. So I think this is useful, right? Because everyone knows Facebook is a $1 trillion thing. You haven't mentioned that, which is great. Never, ever discuss Facebook's market size because you shouldn't patronize your investors. But, what is the market for a product like this? And by the way, you've said in the UK, but then you've put worldwide, so you've mixed things a bit here.
Yeah.
So you might, and you've shown a picture of the world, not the UK. So I think you've got some mixed metaphors happening.
Okay.
But let's take a look. So 290,000 companies. Okay. Is this 290,000 companies worldwide or the UK?
So the ones at the top of the UK, and then the thing at the bottom is for worldwide. Yeah, sorry, I just realised that's a bit confusing.
So the 297,000 companies is UK companies.
UK companies, yeah.
Okay.
On average every year.
But then it says 16,000 exist in the UK.
Scale-ups.
Got it. Okay.
Yeah.
All right. And then SMEs 2.5. All right. PR agencies. Okay. So I would ditch the world map and just say, the UK market. And now you might show, instead of showing equal size bubbles, I mean, actually, I use, by the way, a similar thing with SeedLegals, which is there are this many growth startups and then this many scale-ups and this many SMEs and this many incorporated companies.
Right.
So you might show it as nested, circles to show the different market sizes. And then you might separately have a bubble this size and the UK this size to go, UK is the start, the world is our oyster, or the English-speaking world, or whatever it might be.
That's a good idea. Yeah.
Okay. And now you're showing, focus here, but growth here, which is an important thing for investors. If you were trying to do global too quickly, it's nice, but maybe all my money will disappear into, offices around the world. But I do want to see the upside. Okay. So next slide. So now we've gone back to our competitors, right? So I think we shouldn't have had the competitors early because you're showing them twice. And now this means showing it twice is probably your focus a bit too much on the competitors. So instead of the normal, what I think is that, two axis matrix, you've got a triangle, which is interesting, SocialSync in the middle. Let's see if that works. So it's slightly hard work. You've said there are essentially 3 axes here. One of these is about post and reporting, one's marketing, which I don't quite understand, and the other was social media management. My take on this is you've told me a couple of slides ago that there are, 4, and I suggested whittling it down to 2 key things that you're doing differently. But those 2 key things don't match the things here. So I think the way, to tell the story is to establish these are the key things. And now when I get to my competitors, they're not going to be doing those things, and that's a segment for you. So I think this could be done in a different way. I think, also the only platform to help you increase marketing performance is quite a bold claim, and I think I'd be definitely kicking the tires on that. I think you would be showing how you're going to pick some narrow set of things rather than, because all of these, of course, will be claiming, if I go to their website, to increase your marketing performance.
Right, I see.
Okay. I'd also be slightly cautious about the everything in one platform because, when I see a slide deck and they're showing me a competitor with $1 billion valuation and you're saying you're the only one that's doing everything in one platform and you're a lot fewer people than they are likely to be, then the question is, how are you managing to do that? So I would really focus on what is your key differentiator, which was about the post optimization, for example. Okay. So the pricing thing looks kind of weird because the numbers at the bottom go from 15 to 129, but the sliders don't look very much different. So
yeah, I realized that today. I was like, the middle two should be way at the bottom. Yeah.
right. Okay. So, I mean, also you haven't picked out your own company here. So I would expect to see SocialSync's pricing in big letters at the top, simple pricing, so advertise your pricing, simple SaaS model, unlimited users, some more info. And then underneath, in comparison, this one is this one's this, and this one's this. Okay.
Right. Okay.
So you are, in this slide, really deciding to sell yourself on price rather than features. What is the goal, would you say, of showing your pricing here? Is it to show that you are cheaper than others, or that what is the goal of showing the pricing and the comparison here?
So for me, it was more to show that it was better value for money, for what you get from us. So you get a load of stuff from us, which would, to get very close to it would probably cost you like £99 of Sprout Social, but then you're still missing X, Y, and Z, and you can get that for £10 a month from our smallest package. But now that I think about it, I'm kind of questioning whether or not this is relevant.
That's exactly where I was going.
Because, yeah.
So firstly, I mean, you're saying the lowest package, so maybe your actual monthly, price is much higher. I don't know, but also, I would be cautious about selling on price because, firstly, others can always undercut their price or change their price or offer a free model or something. Also, it indicates if people are paying the others that price and they are giant companies, clearly companies are willing to pay that. So maybe the counterpoint is, why are you charging so little? Is it because you're not full featured enough? So I again would probably focus on the key feature. And if you think there is a price opportunity, you might explore that. Okay, so team. I think the team slide is really nice because it establishes, there's a team, which is great. You haven't put yourself in too big letters there, which is nice. I mean, there's nice cred there. I think you've got the theme throughout the slide deck of the angled forward momentum kind of thing, which is good. And you've got some advisors, not too many advisors, and you've clearly got a team happening. So the fact you've got customer service manager and so on means you've got customers, which is great. It's not just, dream at this point. Okay, cool. Okay, so now we come to the financials. So my suggestion generally is to always have two versions of your slide deck. One more of a product deck, which doesn't have financials, and one with financials. And the financials one is only shared with a small number of investors once you've met them, face to face or now on a Zoom call. And the reason is, the numbers change. You don't want different people having different versions of the numbers. You don't want the numbers out there so that in a year's time, people can go, hey, your numbers are nowhere near the numbers that you mentioned. So you use the first version of the deck as the teaser to get the meeting with you. And then you might go through the numbers separately and you might adjust them because, some investors are more aggressive in the numbers they want you to hit, or they want you to be a unicorn, and others will, hop in earlier on and so on. So
if you were at like a pitch event, like pitching in front of loads of investors, would you use more of a, because I see people always have some form of financials. So would you use like a more watered down one, or would it just focus on the revenues that you've acquired and then the financial forecast is a discussion after the fact?
Okay, so if you're at a pitch event, for sure, I would not have, a screen with lots of numbers on it. I've been at events, and the surest way to have people fall asleep is you're standing in a room, and there's a screen where you can only see, letters in more than 500-point font.
Right.
And now there's a screen filled with little numbers. And it's clear the person presenting has not thought about their audience. No one's looking at EBITDA at that point. So, and that's really the gist of it, which is, your pitch deck is going to serve a particular purpose. And in that journey with investors, it's either going to titillate and excite and want people in, the fear of missing out, or it's going to satisfy the, business rigor of some, or it's going to close the deal. And so I think, in the version that I'd be looking to explore on Pitch Deck Clinic, it would be the teaser. So here, there's just too many numbers. No slide should have more than, a dozen or so words. And if you have to explain it, with these forecasts are. So I think it's something like this slide would be a timeline of, 2020, 21, 22, 23 or something like that. You can't go further out. And then some, small bubble, bigger bubble. You want to show some growth. So this gets reduced to something like, estimated revenue. And then you might say, P&L or something like that, so that you get to see that you're underwater the first year or two, and now you start to become profitable. If you're underwater forever, then investors go, that's Uber, you keep losing money. And and if you're profitable after day 2, investors go, great, but why are you doing a funding round? You didn't need it, you're profitable already. So, and then you want to show that suitable amounts of the money are being plowed back into the business, rather than, great, you built it, you're never going to build anything else, because actually everyone knows that you're always building stuff. So I'm not going to dive, let's have a very quick look at this now that we're here. So, your revenue is increasing slightly year 1 to year 2. So this is the thing I always focus on. What's the rate of revenue growth? Then you're showing a 4x and a bit between 2 and 3, and a 3x and a bit between 3 and 4, and then a less than 3x 4 to 5, which I think is a plausible and actually reasonably optimistically realistic set of figures. So that's good. I mean, sometimes some companies will go like 5x in the first year and then 2x the next year. It's like, what happened to your business? Or 18x the first year, and the second year it's like, okay, nice, but unlikely. So gross revenue, all right, your EBITDA. Okay, so exactly as I had thought without looking at this, you're underwater for the first couple of years, and then you're profitable, so that looks good. Cash flow, closing balance. All right, so your closing balance shows you've got money in the bank, at the end of year 1, which means you probably don't need to ever raise again. So that's something to consider. So I don't think you need to tweak the numbers just based on that, but you might need to explain to an investor, are you ever looking to do another funding round? Because investors make their money back either if they sell in a future round at a higher valuation, or sell on an exit of the company. So investors are often looking for something that's different to what you're looking for. You're looking for a business that grows, is profitable, pays everyone's wages, helps you build a team, changes the world, gives you fun stuff to do. An investor goes, where's my return? And looking at this, they're going, oh, great. If you're paying dividends, which no startups do, I'll get something back from that. But where's my, sale opportunity? So that would be an exit of the company. Okay, so the alpha trial users helped us make 276 improvements. I think firstly, 2 things. One, this is the wrong page to mention it, because this is all about your financial forecast, not your QA program. And the second thing is, it probably means that there were 276 bugs in the app at the beginning.
Yeah.
So I probably wouldn't mention that. Okay.
Yeah.
And then also over here, you've got separately, quite a few words about retention, conversion, and so on. I think they might belong on a slide, but it would be a separate slide.
Okay.
Because again, we're going to challenge each of these separately, and I like to keep each slide simple and focused. Okay, so I think this is a really powerful slide because it indicates that stuff's actually happening. It's not just a dream. And that's really the thing with most startups. There's a dream, and then at some point it's happened. So you've got 25K, over 6 months. So I think one of the problems I see on this slide is it mentions 2019. So what happened between then and now? So as the investor, I'm always looking for growth and traction. And when I see companies that have had some amount of revenue, it's obviously modest compared to the 23 million you're showing for a few years' time. I'm thinking, is this a small amount trickling along month on month, or is it actually growing? If I say, hey, Nick, come back in a month's time, will this number be the same or will it be much more?
Right.
And of course, as the investor, I always have the option of going, let's talk again in a month and see what your revenue growth is between now and then. So I think the conversion rates and the paying customers, looks promising. But I would be looking for probably, some graph to show that the numbers are going up. And if I don't see the graph, I'm probably going to assume there's a reason why there isn't a graph. Okay. So it's all about, it's all about traction. And I think that's key. If investors aren't biting, how can you show traction? Unfortunately, it's often a catch-22. You need their funding to get the team, to get the promo yourself, to get the app built and finished and whatever and promoted, and then you get the traction. So what can you do in a bootstrap mode to show that vortex? How can you get some more users? Can you get something with AppSumo? Remember, we're also, midway through Q3 now, so make sure that everything in the deck is current, because as the investor, I'd go, Q3, great, so where are you doing with AppSumo right now? And if you're not there, so that's one of the things I frequently see on Pitch Deck Clinic is claim that hasn't been updated, which is now sort of verifiably at the point it's mentioned. Okay, so product roadmap. I think roadmaps. So I'm greatly amused with the slide because you've got your rocket, which is doing a few loops and ultimately going down to the ground.
Yeah, I just realized that.
And so the messaging is
like the negative impression, isn't it?
Exactly. It's run out of fuel and it's plummeting to Earth.
It's just successful returning to Earth, like with Musk's,
Maybe more like a fire.
You have to spin it.
Well, it certainly draws attention, but I think for me, firstly, there are far too many words. Secondly, there is the I think a roadmap should look like a timeline and should go upwards, or at least, longwards. But let's pick it apart piece by piece. So SocialSync product roadmap. Okay, great. So you just, you'd have the SocialSync logo at the top left. I don't think you need to say your name again. It's just our product roadmap. Next thing is, you're in the social media space. So I'm expecting everything that you say is going to be sort of BuzzFeedy-ish, because your app is going to tell people optimize messaging. So when I look at the next line and it says, this is the public roadmap, it's a bit kind of meh, because you've already said roadmap. You didn't need to say that, so lose that bit. As of March 2020, ditch that. I'm expecting it's going to be up to date. So some of these features may be subject, dude, we know it's a startup, everything's subject. You didn't need to put the disclaimer. So ditch, so all of that wording at the top goes. Okay, so now V2 launch. So Q1 and Q2, so we're already past Q1 and Q2.
Yeah.
So I would have expected to see, Q1 and Q2 and then launched V2 product. Yes, you've got a big set of features in there. Maybe you can just, it would be a list of things. Okay, great. So now Q3, which is now. So, if you call the first one a V2, maybe call this a V3. Otherwise, more features is a bit, it's like, yeah, great. You're always adding features. This is the hotly anticipated V3. And then V4 is going to be thanks to your investment, something like that. Or maybe this is V2.1 and, V3 is with the investment. So sex it up a bit. If it had been now, timeline, I'm now seeing momentum. And, okay, so then you've got feature expansion, feature additions. Okay, well, let's look at feature expansion, because that's coming up. The other one's about to launch, I assume. Okay, the Think Crello on steroids. Well, I don't know Crello, so I'm not sure that's useful to mention. Be always careful about showing some, industry in things. Social listening. I think the gist of this is that you're showing lots of features, internal ones, advertising system from within SocialSync. But I haven't yet understood the proposition itself.
Right.
And I think this is probably the key issue that I have in the slide deck, which is you've showed a few screenshots, but I haven't seen how somebody would use it. And I'll tell you what, let me whiz through the last pages and then we'll switch off screen sharing and get back to that. Okay, so we're raising 250K. All right, so I would, so raising 250K is great. I don't think you need to mention that there's only 140K SEIS. I mean, it's, you've just got 10K of SEIS. That's great. Just SEIS and EIS. Based on a 1.4 mil valuation, you could just say, valuation 1.4 mil, or you could leave that out of the deck completely and discuss that, because valuations sometimes change, right? So if you're raising 250K, 1.4 mil, so it's 5, it's around 15% or so dilution, which is spot on. So those numbers work out right. Okay, so now you've got another EastEnders map of the Thames here. And so the founders and investors to date have invested 190K. I'm not sure that's relevant. I suppose it's useful in that we know that, it's not like you came up with the idea in the pub yesterday. Money has gone into it. So cool. All right, so let's have a look at where the money's going. I think where the money is going is, incorrectly put on this river metaphor, whatever the metaphor is. I think it's really a pie chart that shows that, 40% of the money is getting spent on tech. 25% is on staff. I'm not quite sure how staff is different to tech unless it's outsourced, because otherwise tech is the staff. 20% is on marketing, and the rest is so the pie chart would be helpful. The fact that you're spending money on tech other than on team indicates you're outsourced the development. Is that correct?
No, so we do it in-house, but I was told by someone that I should separate the tech from the other staff, so it's clear that we're hiring developers as opposed to office staff.
Okay, but then so that is fine. So you could say team versus other, or team could be split into tech team and marketing team. But if it's all team, because if you call it tech and the other one is staff, then obviously I think tech is not staff, but they're all staff. They're just some of them are developers and some of them are marketing people. Okay, so here I think probably since you're showing a split of spending, I think a pie chart might be the right metaphor, and that lets me see at a glance. And then, by the way, is also impervious to the amount, right? Because if you raise more or less, I still see the split, and would invite me to then go, oh, great. So, your business is, I can then see at a glance, essentially a tech business or a marketing business, depending where most of your money is going. All right. So I think this summary piece isn't needed. So the summary is like, had this been a 3-hour presentation, like just to recap. But here you're telling me something you've told me on the last page, where, by the way, the 142K is slightly different to the 140K on the last page. The fact you've got a trademark is nice, but trademarks cost £250, so not a key selling feature. The clients, I think you've mentioned previously, the chaos was the marketing point. I would lose the slide. It's not adding value. So now the last slide, I think, is a little bit busy, which is I think it's you could have said, now raising 250K, contact Nick, and then it's just your email and the website. I don't think you need to put the WeWork address, and you don't need the company number here and so on. It's, you're a social media business. Keep it happening and BuzzFeedy. I think the key thing is the deck is, nicely laid out. I would swap some things around, and you got feedback on that. I think the key thing I'm missing is, what is it exactly that you're building, and who would use it? So I like the concept of personas in slide deck. So imagine you had Dee, who's running social media in your company, as she is at SeedLegals. And so Dee is using a range of tools today. So imagine there was a picture of Dee going, this one is too complicated. I don't get this. The Facebook ads thing is a nightmare to navigate. And now next picture is Dee with the SocialSync app. As I said, the name SocialSync, it actually sounds great, right? So what is Dee thinking at that point? What are the key things that she's using? So if Dee's saying, oh, amazing, it's optimized this title. So she's entered a title, of my new SeedLegals newsletter, Newsblast or something, and the app has told me something else. So now I get it. So can you bring it to life and show me what it is? Because I think one challenge I often see in slide decks is, they spend a lot of time looking at the market and looking at, the revenue and looking at the P&L and so on, but I'm missing the essence of what it is. And I think that is the case here. So, were you to be sitting with me in a meeting, you'd probably take out your phone and show me this amazing app and demo it, and I would be sold, but I've missed the essence of that here.
Right, I see. Okay. So
you're sounding slightly skeptical.
No, I'm not skeptical. I've been thinking about changing it for a long while, actually. What I was thinking of doing was changing it so that it would be, we can enhance your social media post instead of saying text optimization with paragraph, and then above it having like a little GIF demo. Someone writing it out, it's saying change these things because on Facebook this will give you more, or based on your last 6 posts, this, when you write this gives you more engagement or whatever, and it just is a quick little step-by-step demo, and then someone can understand it, as opposed to what we currently have, which is just a paragraph of text and complicated words.
I hear you. That sounds genius. A couple of things. One is, if you're sending a PDF, you may not be able to do the animation, so you can and if you're sending it via DocSend or something, so you've got a couple of things to do. One is you could create a video and send a video link. sometimes it works, sometimes not. The other thing is you can just explain it over 3 or 4 screens.
Yeah.
So imagine there's a picture of a phone. So, is this done on a desktop or is it done on a phone?
Either or, yeah.
Okay, so I mean, if you're scheduling or setting up complicated campaigns, you're probably doing it on desktop, but you then might be out and about looking at the performance on your phone. So you might show these use cases, but instead of animated GIFs, you might do it over 4 slides. Show
step 1, this. Step 2.
Thing 1, pick a time, whatever it might be. SocialSync will tell you a better title, and then you might just show, either a mock-up or maybe the display really does that. Hint, too many words, too many characters, try 60 characters or fewer, don't put 3 exclamation marks, whatever it might be. So you didn't need to do it as a GIF. You can just show it as a serialized set of images. And then not only do I get what it is, investors also either invest in other companies, or if they're VCs, they've got their own company. In your best case, they go, this is awesome. Let me talk to my social media team and get them to use your products. And then they bought into it, right? So, if you can turn the investor opportunity into a customer opportunity as well, that's even better.
Okay.
All right. Any questions I can answer?
Just thinking now. Sorry, you've given me a lot to think about in the short time we spoke about, which is good. It's really good. I guess the one question that I'm thinking of is, in the deck, I went to great lengths to, I showed, our competitors have reached these valuations. This is the potential opportunity. However, like you say, it then begs the question of, well, if you're doing this ingenious thing and they're valued this, they can just pour a tech team into it, and then you're no longer the only kid on the block that has this special kind of thing. So do you think doing that sort of undermines the value proposition from the company?
So that is a great question, and some investors get obsessed that your competitors, could copy you. I've done a few startups where I've been initially, obsessed that Twitter or Facebook or whatever could add as a feature, what I was doing, and they never did. And actually, I've realized that if you pick a right proposition, yes, you could be a feature for a competitor. But if you look at, for example, Twitter, every innovation they've done has failed spectacularly. People expect Twitter, except for making tweets longer, people expect Twitter is a list of tweets. The Discover tab, the Social tab, the TV tab, all the shit they built, nobody cares. So, if people are using a particular product for something, people, I think, expect in a second to see what the essence of the product is. Right. Is it to schedule your tweets at a particular time? Is it to sync to many different platforms? And maybe that's the key for your product, which is, what's the essence of it? Is it to improve the post that you're going to make? Is it to sync it and hone in on the essence of it? And that's your strategy. So then the next thing is a common, a thing that an investor or astute investor would look at is, are you really a company or are you a product feature? And if you're a product feature that someone else could add, then that really is, potentially a short-lived business. But, I don't think we've really teased out here exactly what the unique proposition is. And then you justify that, this is something unique. And by the way, if a company, a larger competitor wants that, they could either try and build it themselves or they can acquire you. So the fact that you are creating something that a competitor doesn't have, might be in a sense an advantage. I think the other thing is, when investors say someone else could offer this feature, I think the conversation goes one of two ways, which is, some markets are a winner take all. So if you are, a social media network, then, you know, or some sort of marketplace in a particular vertical, it may turn out that winner takes all applies. But if you're a cheese shop, there are a million cheese shops. It's okay. Nobody opening a cheese shop has somebody go, you know, there are other people selling cheese.
Yeah.
There's no good. So in a B2B market like this, I don't see any problem with, you know, another one existing. It's not a network winner takes all. But you then want to show how you're different to others, and, you know, have a vision that sees you innovating and remaining different and desirable.
Okay, brilliant.
All right, so you told me at the beginning that you get lots of different competing feedback. I hope the feedback on Pitch Deck Clinic was useful, differentiated, actionable. But as I said, you know, never listen to a single data point, interpret that along with all of the other data points. Just because I've said something doesn't mean it's any better or worse than any other feedback. You're going to pick some, you're going to ignore some. And then, you know, whichever, it needs to be your story that comes out. But I think important to me is it's always a story. You pick the unique thing in your product, you show why people want it and love it. You get me hooked in that I want to be part of it. And then over a few more slides, you explain the market opportunity to the competitors, how much you want, and close the deal.
Okay, brilliant.
So Nick, Tanya, great talking. Thank you.
Thank you.
Loved the idea. I would love to try it out with my team. So, and with Dee and my team being the perfect customer for you. And so, you know, I would like to see then the equivalent of, you know, Dee in your slide deck using and loving the product and solving particularly a problem for us.